Washington, Reuters, U.S. consumer spending rose solidly in December as demand for goods and services increased, but the gain came at the expense of savings, which dropped to a 10-year low in a troubling sign for future consumption and economic growth. The Commerce Department said on Monday that consumer spending, which accounts for more than two-thirds of U.S. economic activity, increased 0.4% last month after an upwardly revised 0.8% increase in November. Households continued to dip into savings to maintain spending amid sluggish income growth. Savings are now at levels last seen in December 2007, when the economy slipped into recession, and are a red flag for both consumer spending and economic growth. The impact of low savings on consumer spending could, however, be temporarily offset by income tax cuts which came into effect in January. Savings fell to $351.6 billion in December from $365.1 billion in the prior month. They declined to $485.8 billion in 2017, the lowest level since 2007, from $680.6 billion in 2016. The saving rate dropped to 2.4%, the lowest level since September 2005, from 2.5% in November. It decreased to 3.4% in 2017, the lowest level since 2007, from 4.9% in 2016. Personal income rose 0.4% last month after advancing 0.3% in November. Wages increased 0.5% last month. Income rose 3.1% in 2017, picking up from 2.4% in 2016. Economists polled by Reuters had forecast consumer spending increasing 0.4% in December after a previously reported 0.6% rise in November. When adjusted for inflation, consumer spending rose 0.3% in December. The US dollar.DXY was trading higher against a basket of currencies. Prices of US Treasuries and US stock index futures were trading lower. The data were included in the Advance fourth quarter gross domestic product report published on Friday. Consumer spending accelerated at a 3.8% annualized rate in the fourth quarter, the fastest in 3 years, after rising at a 2.2% pace in the third quarter. Robust consumer spending helped to offset the drag from trade and inventories on the economy, which grew at a 2.6% rate in the fourth quarter. GDP increased at a 3.2% pace in the third quarter. Last month, spending on long-lasting goods, such as motor vehicles, increased 0.7%. Outlays on services rose 0.5%, reflecting rising demand for utilities. Monthly inflation ticked up in December. The Federal Reserve Euro trademark's preferred inflation measure, the Personal Consumption Expenditures, PCE, price index excluding food and energy, rose 0.2% in December after a 0.1% gain in November. The so-called core PCE increased 1.5% in the 12 months through December after a similar rise in November. The core PCE has missed the FTA Euro trademark's 2% target since mid-2012.